Hello. Today we will talk about a highly profitable investment. The object of today's analysis will be the Block company. Block Incorporated is a fintech company that enables merchants to accept card payments and provides them with reports and analytics within the Square segment. Within the Cash App segment, the company provides an ecosystem of financial products and services to help users manage their money. Block was founded by Twitter co-founders Jack Dorsey and James McKelvey in 2009 and is headquartered in San Francisco, California. Block's shares have lost more than 76% of their market value over the past 6 months due to a decline in investors' appetite for risky assets. The huge and growing cashless market is a natural growth driver for Block, as all of its solutions are based on cashless transactions. The recent acquisition of Afterpay will provide Block with additional potential, both through significant growth in the BNPL, buy now, pay later, market and by adding to the Cash App customer base. By integrating Afterpay into the Cash App, the company is able to gather large amounts of data on consumer habits and preferences to use to enter the advertising market. Block has shown a high growth rate and, unlike other fintech companies, generates positive cash flow and has a strong balance sheet. According to Wall Street consensus, Block trades at a substantial discount to fair market value. Reason 1. Market potential. For thousands of years of human history, cash, initially coins and later banknotes, has been the preferred means of exchange. In recent years, however, there has been a steady growth in digital payment methods, credit and debit cards, credit and bank transfers, e-wallet applications and even virtual currencies. According to the Smithers Report, non-cash payments are expected to grow at a compound annual growth rate, CAGR, of 10.5%, reaching $1.22 trillion in 2024 and $1.96 trillion by the end of 2029. As part of the Square segment, the company provides its customers with hardware, including point-of-sale terminals, magnetic stripe readers and universal terminals, as well as software for processing online payments. Block solutions thus enable both offline and online transactions to be processed. After the takeover, Afterpay, Block has entered the young and promising buy now, pay later, BNPL, buy now, pay later, market. According to Precedence Research, the global BNPL market is valued at $125.1 billion, of which 30% is in the US. The market is expected to grow at a compound annual growth rate of 43.8% to exceed $3.3 trillion by the end of 2030. Thus, the huge and growing market for cashless payments is a natural tailwind for Block, as all of its solutions are based on cashless transactions in one way or another. The acquisition of Afterpay has provided the company with an additional revenue driver, both through the service itself and the significant growth of the BNPL market, as well as through the growth of the Cash App customer base. Reason 2. New growth points. The last reporting period showed a number of trends that could have a positive impact on Block's financial performance in the long term. Firstly, there has been strong growth in the company's overseas markets. In the first 6 months of 2022, 44 new products were launched internationally and the gross margin in the Square segment outside the US was 13%, up from 8% a year earlier. By comparison, PayPal's international revenue share is 49%, clearly demonstrating Block's global potential. Square for Restaurants software has also contributed significantly to the company's financial performance. The software includes spreadsheet and order management, a kitchen display system and revenue and expense reports. For the first half of 2022, the gross payment volume from Square for Restaurants more than doubled compared to last year. The trend is likely to continue due to the recovery of the catering industry following the removal of pandemic-related restrictions. During the last conference call, Block executives revealed plans to integrate Afterpay into the Cash App. The app will receive an update that will allow shoppers to find shops for online and offline purchases. The Cash App will integrate 144,000 merchants that have previously worked with Afterpay. This integration will open up big opportunities for Block. The company can gather large data sets about consumer habits and preferences and use it to better target potential customers. In this way, the company can open up a large market for advertising and gain an additional source of revenue. Block reported Q2 revenue of $4.41 billion, down 5.8% from a year earlier. However, the figure includes transactions with previously acquired bitcoins. The company's management had asked the Securities and Exchange Commission, SEC, for an exemption because Bitcoin was not a real part of the company's revenue. Block wanted to include only the margin derived from bitcoins, which is very small, in revenue, but the SEC did not authorize the exemption. Revenue excluding bitcoins has grown at an average annual rate of 35.7% over the past 5 years. Over the last 12 months, the figure increased by 17% year-on-year to $8,994 million. Block ended Q2 2022 with adjusted revenue of $2,619 million, a 33.9% increase over the comparable period last year. At the end of Q2 2022, the gross margin for the last 12 months was 56.74% compared to 57.52% for 2021. The operating margin for the same period decreased from 3.02% to -4.05% due to additional operating expenses resulting from the acquisition of Afterpay. Net margin decreased from 2.07% to -5.44%. The company's operating cash flow for the last 12 months amounted to $664.80 million compared to $847.80 million for the full year. Free cash flow to equity decreased from $543.50 million to $511.70 million. The decrease was due to a squeeze on business margins. Block has a strong balance sheet. Total debt is $4.633 million, cash equivalents and short-term investments account for $4.96 million and net debt is $327 million. Block has no direct competitors, but its various offerings overlap with those of PayPal, MasterCard, Visa, Shift4 Payments, Sophie Technologies, MoneyLion, and others. Block trades at a substantial discount to peers on an EV/sales multiple with the ratio amounting to 2.33x. On earnings multiples, the company trades at a premium to the industry average, but Block has the highest growth rate among the companies in the sample with positive operating cash flow. The minimum price target from investment banks set by Evercore ISI is $55 per share. BTIG values Block at $175 per share. By consensus, the fair market value of the stock is $111 per share, suggesting a 71% upside potential. The takeover of Afterpay cost Block shareholders $13 billion. Failure to integrate the acquired business or to achieve synergies could result in large asset write-downs and significant financial losses for Block. Block is a low-margin business, which poses risks to shareholder value in the current macroeconomic uncertainty. For example, a cost increase of a few percentage points could lead to negative net profit. The financial industry is cyclical. The expected recession and the decline in consumer spending could have a significant impact on Block's financial results. Buy shares at a price of $59.45. Allocate no more than 1% of your portfolio for purchase. Sell when the price reaches $111. Thanks for watching this video. Please like and subscribe. More interesting invest ideas will be waiting for you. Bye.